FanDuel also said to be taking a unique position to going public, not via an IPO, but a reverse merger. Explain how this works.
The basic idea is, and just to be clear, this is very old wine in very new bottles. This idea has been around for decades. They used to be called public shells. They used to be called blind pools. In the 90s, some young banker decided to call them special purpose acquisition companies. SPAC, exactly right. And the idea is the sponsors of the SPAC go raise a public shell. Investors put the money in, and then they have 2 years to go look to buy something. And the idea is that in this case, if it's true, they will buy FanDuel. And suddenly, overnight, FanDuel becomes a public company by merging with a public shell.
What do you make of the strategy? Is it a good one?
I think this is the classic example where the true scandal is not what is illegal, but what is legal. SPACs are perfectly legal, but they are the path of financing of last resort. If you can't go public any other way, if you can't get banks to take you out, if you can't get the markets to support you, if you can find somebody to buy you that's already public and it accesses a balance sheet, then go do it. But it's a bad deal for investors, a really bad deal for investors.
And is that a sign they don't have good interest from investors as of now? I mean,
yeah,
is that a sign the business isn't going well?
It's a terrible problem of adverse selection. You can find your way to a SPAC if every other door has been closed to you. Here's a little known fact. Since 2003, the average return for SPAC investors, negative 20%. The average return for SPAC sponsors, positive 1,900%. That's all you need to know. They take 20% right off the top of the value of these public shells just for organizing the effort.